Good morning, traders. Good morning, traders. Today we're going to discuss how to become a clever Elliott wave trader. All right. Do you want to become a clever Elliott wave trader, or are you a clever Elliott wave trader? So some trader may be thinking, George, who is a clever trader? Okay, are you insulting new traders? No. All right. So if you are a new trader, a new Elliott wave trader, all right, there are different stages that we go through. All right. So what I always say to traders, we go through the first phase, which is the exploration stage. You want to understand things, you want to try things, you want to do all sorts of things, which is very, very important. And I will never stop a new trader to go through that process, because that's your background, that's your foundation. And during that stage, one will make a lot of mistakes, and that will form your character as an Elliott wave trader in the future. All right. So don't look at this video as a reproach to traders, but I'm going to talk about a few things, and I encourage you to watch the full length of this tutorial. All right. Now, talking about a clever Elliott wave trader is normally before one can become truly clever, you have to go through different things. So you face different challenges in your Elliott wave analysis. You have overcome some of them. All right, and you have gained a bit of experience. All right, and you are maturing as an Elliott wave practitioner. So in order to become a clever Elliott wave trader, it will take time. So it's not going to happen in one day. It's a process, a gradual process. I think this is very important. If you want to achieve something great, just go one step at a time, gently. Usually, traders worry too much about other traders, which I do not. In fact, if I have traders, if I'm a hedge fund manager and I'm managing traders, I will make sure that all traders will trade separately. But what I will do at the beginning of the day, all traders will come together. They will have their meeting, they have a discussion, put their point forward. But as they want to trade, they will trade separately, because you want to. Every trader is different. All right. All right, we're not going too much away from the main topic today, and also to avoid that the video is too long, let's go to the bottom of what we are about to discuss today. All right. So we are looking on this Euro Japanese yen currency pair, and I'm on the monthly chart. All right. Looking at this, the price structure, because when we are talking about Elliott wave, we are not just looking at the chart, we are looking at the price action. How, did the price, move, all right? Which pattern is being formed? Where is the price going? In another way, what is the price action is drawing, so to speak, all right? But there are different, so in order to become an Elliott wave, a clever Elliott wave trader, all right, we need to understand the Elliott wave principles, all right, Those are very important for us, and we need to be able to interpret them carefully. So generally speaking, a lot of, at the early stage of Elliott wave trading, a lot of traders will interpret the Elliott wave theory like a science. So they will say that 1 + 1 = 2, it must be like that, which is normal, There's nothing wrong with that. It's a first stage, all right? So one will be expecting the Elliott wave theory to dictate what the price will do, but it doesn't happen like that in the financial market, all right? The next thing that I want to say to you is that the interpretation of the Elliott wave, theory should not, violate the basic, market principle. All right. For instance, one of the basic market principles is that if a financial instrument is going up, all right, it must display higher lows, higher high, and should stay in a rising channel. This is true on every time frame. So when we are applying the Elliott wave theory, we should not, violate that basic, okay, market principle. So price going up must be in a rising channel, must display high lows, high until it fails to display a new high. With that in mind, we will become a clever, okay, Elliott wave trader. So though we are specialist traders, because the way Elliott wave traders mindset function is different. So they have tried stochastic before, they have tried MACD, they have tried all sorts of things. Now they have discovered something that makes sense to them, to their trading style, and they are happy, they embrace, all right, so to speak, okay, you can imagine, all right, embracing the big, okay, all right, Elliott wave theory, and they are happy to use the Elliott wave theory. And those type of traders do not want to use anything else. You give them MACD, they don't want to know. You give them stochastic, they don't want to know. You give them anything else, they don't want to know, because they want to use only Elliott wave. And you will notice that all the time. But in order to become a clever Elliott wave trader, do not shut down everything else. This is what I want to say to traders. Do not, though you are a typical Elliott wave trader, do not shut down everything else. Do not ignore the stochastic. Do not ignore MACD. Do not ignore Fibonacci. Do not ignore fractal pattern trading. All right. Do not ignore basic, very important, basic market principle. That will make you a clever trader. Do not discount other traders. All right. I'm going to come back to that in a minute. So you may think that, George, what's going on today? All right. So it's early morning in London, so I'm quite refreshed and I'm talking to you. So look at this chart, okay? So you can see that the financial instrument, look carefully. So we are talking about Elliott wave, do not forget. So price went up from here to here. So the first question is this: why did the price stop here? All right? So this has already happened. Now we can ask the question: why suddenly the price did stop here? Okay, the first and correct answer will be that there are resistance in this zone. Okay, here it is, there's a resistance here, and the price reaches that resistance, and it's changing direction. So this is a basic market principle that a financial instrument that is going up and reaches a resistance zone. We acknowledge that resistance level and may turn around in that zone. So when we are using our Elliott wave theory and when we are forecasting the market using the Elliott wave trader, we must not ignore those basic, at the key level. So you are using the Elliott wave on 5 minutes, on the 10 minutes, on the daily chart. Draw your key level, key horizontal support and resistance level. Draw your key trend lines, all right? And things will become a little bit clearer to you, okay? All right. Next point. All right. Why did the price stop? So we give the first correct answer, which means resistance in this zone. Another correct answer is that if you look carefully on this chart, there is a round bottom chart pattern here. Can you see? A round bottom chart pattern. So if you want to know a little bit more about chart pattern trading, go to www.stochastic-margin.com or check out our videos about is this the most powerful bullish chart pattern at Joe Trio YouTube channel when I'm talking about cap and handle chart pattern. So there is a round price then around minus 180 degree. Okay, and then break above the neckline. Professional will measure the depth of the round bottom or the height of the round bottom and we project it to the upside. So the next correct answer where the price did stop exactly is that professional that are using this round bottom has set their greedy bullish target at that point in time. That's exactly where the price did change direction. All right. So by combining, all right, the basic market principle with the Elliott wave trading, all right, we will become a clever, Elliott wave trader. And when we are counting wave, this will also help us to understand the price structure. Not only that, this will also allow us to understand why a pattern, an Elliott wave pattern, is distorted. Why did so trader know Elliott wave pattern, all right, the horizontal triangle. What is horizontal triangles? Okay, the A, B, C, D, E. These are horizontal triangles. All right. You may understand why the price will behave in a certain way. Why sometimes you say, oh, I'm not very sure about my wave count. Go back to the basic market principle and sometimes things will become clear to you. So suppose you were here, you were counting where you say, okay, George, price went down. Okay, George. Okay, here it is. I draw my trend line. Okay. connecting this point and this point. It is the first wave all the way here. All right? And you are asking all sorts of questions. By checking out what's going on, you will be able to improve your wave count and also become a clever area wave trader. Next point, my friend. We don't want the video to be too long, yes or no? Now, the price stop here, now we know that we are in a resistance zone, and also some traders use the round bottom chart pattern here. Another thing we want to show traders, here it is. Now, the price found a resistance here. Okay, so price went down, blah, blah, blah. Now start pulling back. So, as an area wave trader, all we care about is the structure of the price. We are architects, okay, price architects. Okay, the structure. We go into we look inside the price. That's what we are trying to do. So the structure is how the price went down. So here it is. Yeah, here it is. Boom, here. Are we all in agreement here? If you disagree that this is not how the price move in this session, put your hands up, which means put your comment in the comment section. All right, so after that, the price went down 1, 2, 3. Now, the next thing I want to highlight here is that in order to become a clever area wave trader, we should be able to interpret, okay, the area wave principles, all right? So what do I mean by that? I mean, after accumulating the knowledge, all right, another way to put it to you, after consuming the area wave theory, we want to digest it, all right, so to speak. So that process will take time. So you learn it, all right? Now you want to understand it. Now, in order to understand it perfectly, you need to use the area wave always in conjunction with the basic market principle. One of the area wave rules stated that the minimum price move is free. Whether it's going up or free, we will expect minimum price move, free move up. This is happening all the time. Now here it is. Look carefully, my friend. Can you agree with me that this price, the price action? If you look at the price structure here, you see it went up one move. Is that here? Is it true? Okay. If you disagree, friend can disagree. All right. Don't be afraid to disagree. All right. So first move up, second move down. All right. We like traders to put comments, all right? It's good. And then here it is, 1, 2, 3. And then you change the direction here, all right? Minimum price move is free, all right? So that resistance zone, trader acknowledge it, and then he pulled back a bit, went to the same zone, only to form a double top. Now, the same thing is happening now. Look at it. 1, 2, 3, down. So minimum price move is free. There is a high chance that we may see a reversal. So what do we need to do? We draw a line there, like we did, put a line there. If it failed, like he did here, pull back, exhibiting the fifth move up. Now, if it failed to go above that third, at the high of that third move or the low of that third move in the downtrend, game on. All right. So here it is. It failed. Boom. Maybe it failed clearly here. They failed. And we have the first lower high. Now you see, talking about a lower high, here it is, we see, now we are combining, okay, an area wave principle with basic price structure. Now, I challenge traders to start adopting this method because I know that more than 60% of area wave traders do not want to know anything else. But it's a big mistake. There are Fibonacci pattern, all right? So we want to know the Gartley pattern, the butterfly pattern, all right? The crab pattern, all right? Those traders are using those patterns, all right? And you want to know. You want to know. And you will become, okay, a clever area wave trader. But the first thing that you want to remember is this. Always use the area wave theory in conjunction with basic market principle. So here we come, we say minimum price move is free. If you price fail to go above that high, we're looking for weakness. So how basic market principle stated that by going up must form high lows, high until it failed to form a new high. Here it is, it failed to form a new high. Now we have the confirmation, which is the lower high. Basic market principle. Basic market principle. So with that, we can improve our trading. So we are again at the same junction. So here it is. I'll give it to you as a homework. All right. We are looking at the euro yen, a bit volatile financial instrument. And if you are trading forex, you will know that your broker may ask you for a bigger stop loss because this financial instrument move fast. So do not criticize your broker for asking too much pips for your stop loss. It's because you can get paid very fast and you can get paid big. So they are just protecting, okay, themselves also as a business. All right. So I'm removing some of my line to clear, okay, a bit of the mess of my chart, and I'm going to give you a bit of homework. All right. So you may say, Joe, who are you to give me a homework? All right. Okay. So if you are new to us, that's how we do it. So here we are. So you see now. So we have it now, 1, 2, 3, minimum price moving 3. So therefore, what do we say to trader at this point in time? The low of that candlestick bar. Now I prefer, you see the low is quite below the line that I draw here. You see, it's below that last line. Let's call it that line in turquoise. Oops. That's not what I want to color. This one here, I want to color this one into turquoise. So that line is a 11073, though the low of this candle is a little bit below it. I'm talking about this candle here. All right. So at this point in time, what do we say to traders? We say to traders, priority to bullish signal above what? 11073, which is the turquoise line on my chart, which means if it comes to 11073 and find a support, or we start seeing a bullish chart pattern, these are basic market principle. So if a financial instrument is going down, all right, the bearish momentum is in place as long as we are seeing new lower lows. But we will notice that the bearish momentum is diminishing if we start seeing instead, okay, bearish chart patterns. Correction. All right. We will notice that the bearish momentum is diminishing when we start seeing, okay, bullish chart patterns. All right. But another thing, talking about basic market principle, I can tell you again, and this will help you also to become a clever Elliott wave trader. So I was explaining this recently at, I think, 24 Stock Trader YouTube channel. All right. There are 3 trends. All right. And I am a specialist of this. You can take my word for it. All right. 3 trends. All right. Take it from me. So the first trend, generally you hear experts will talk about long-term trend, medium-term trend, and short-term trend. It's not a joke. It's happening all the time. So the mistake that we don't want to make is this. If the long-term trend is bearish and the medium-term trend is bearish, all right, when do we sell? Both long-term and medium-term trend are bearish. When do we sell? We sell only when the short-term trend is aligning with both medium and long-term trend. So when the short-term trend is changing from bullish to bearish. On the other hand, when both the long-term trend and the medium-term trend are bullish, when do we buy? We only buy when the short-term trend is changing from bearish to bullish. But sometimes it's not always like this. Now, those are just basic market principles. Now, sometimes you will notice something that the long-term trend is bearish, but the medium-term trend is bullish. What do we do then? So, long-term trend is bearish, medium-term trend is bullish. What do? We will give priority to bullish signal on the short-term trend because the medium-term trend is controlling the short-term trend and the long-term trend is controlling the medium-term trend. But we will know that because the long-term trend is bearish, the bullishness of in a medium-term trend may be temporary. Now, ladies and gentlemen, I don't want you to get confused, all right? But the point I'm just making to you that those are just basic market principles. So in this case, because the long-term trend is bearish, but the medium-term trend is bullish, we want to give priority to bullish signal on the short-term trend. So we will buy when the short-term trend is changing from bearish to bullish, which means the short-term trend is about to align with the medium-term trend harmoniously. All right, my friend, you are getting it now. I think I make my point, which means do not use the area weight theory as a science, and do not focus only on the area weight theory. Expand, okay, your skills, expand your knowledge. Do not call other traders mumbo jumbo traders, and do not think that, okay, without the area wave theory, you cannot trade. You can trade just with the price action alone, which is the number one indicator. That's why the area wave theory works, because it concentrates on the price action alone, and we are examining, okay, the price structure. Okay, so therefore we see 3 move down. We say to trade priority to bullish signal above 11073. This bearish momentum will diminish when we start seeing, okay, bullish chart pattern. So on the short-term time. So before, so you see here, it's going down, it's bearish, yes or no. Before this will become true, will change completely. Before we will see a clear-cut reversal, where will the reversal will begin? The reversal will begin from the short-term trend, from the lower time frame. But the mistake that we don't want to make is that the short-term trend is only a market noise. Market noise may not last. So you start seeing on your 5-minute, on the 50-minute time frame, on the 30-minute time frame, you say, now the trend is changing. But because it's only on the short-term trend, it may not last. But for that reversal to become clearer to us, it needs to expand to the medium-term trend. So we start seeing bullish chart pattern on the short-term trend, and then that bullish momentum is expanding. Now we start seeing again bullish chart pattern on the medium-term trend. And if the bullish momentum continues, we'll see that expansion heading to the long-term trend, and we have an established reversal in place. All right, but if the short-term trend and the medium-term trend, okay, confirm a change in the direction of, okay, the long-term trend, we need to use a top-down trading method, okay, to enter the trade. So here we are. You may say, Joe, what are you talking about? We see the minimum price move according to Elliott wave principle is free. All right. Priority to bullish signal above 11073. So what do you mean by minimum? It means that it may go down more than free. But if it fails to go beyond that low, it will change direction. All right. So basic market principle, here it is. So the price is now in what? In a declining channel. If you are Elliott wave trader, you are violating the market pattern. Here it is. Basic market principle. Though there are sellers in this market, so as if the price are going up, they will try to sell on the edge of the declining channel. We know that, and we are aware of those traders. There is another group of traders that will try to sell near the median line. Those aggressive bearish traders. That's where the price is now. Let me call out that the median line of the red channel into pink so you can see it. Oops, I have too many pink lines. Let's change this one into dark green so we may see only one pink line. So pink line, median line of the. So some trades here, he went to the lower part, bounced up, people sold it. Now we are again on the edge of that median line. Let's go to the hourly time frame. Hopefully we can see on the hourly time frame. That's my pink line, my pink trend line, you see. Here it is, okay. On the hourly time frame. So those are just basic market principles that we need to know. All right. Now, if we go now, let's go now. I'm going to go to the 2-hour time frame. And see, you see, we start seeing on the 2-hour time frame that this financial instrument is having a bit of difficulties to go beyond. You see, low, equal low, equal low, equal low. Now, that is a weakness in the bearish momentum. But that change should expand to a medium-term trend and become stronger. Apologies to traders. See, let's see how long I've been talking to you now. I've been talking to you now for 25 minutes. All right. So I think I've said I want to stay on the subject. All right. So remember, in order to become a clever Elliott wave trader, one must not use the Elliott wave theory alone. One should combine the Elliott wave theory with the basic market principle. That's all. That's all I want you to understand. That's why it will not happen in one day. But just put it into your head today. So you may, whenever you are using the Elliott wave theory, you may try to combine it with other trading skills that you have that you do not want to use, because Elliott wave traders have many skills, but sometimes they don't want to use them. They just want to use their skill. It's like you have many buttons and you only like one button. But you want to use many buttons so you may become a multi-talented trader and see exactly what is happening. All right? All right? So, what can we say? All right? So, it's going on 1, 2, 3. If you fail to find a support here, if you fail to go beyond the low at 110, I have too many lines now, I can't see it anymore. 11073. You see here, if you see, it touch it here, that line. Let's go to the daily chart so you can see clearly. Can we see that turquoise? Now that's here it is. You see, touch it here, it touch it here. So that level is still in place. Form a double bottom there, forming a weakness, and form a higher low. Now it's stuck at 11245. But a mistake that we will make is that definitely the price will go up. That will be, because if we are Elliott wave trader, we think that way. That's a mistake, because once again, we are trading against the market pattern. The price is the declining channel. We don't want to ignore it. It's not out of the wood yet. If you have any question or suggestion, put in a comment section, all right? And in due course, I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about how to become a clever Elliott wave trader. Happy trading to you all, and speak to you soon.